Hello, everybody. It is, I think, a holiday weekend in the US. I think it's Labor Day, and I hope hope everybody's doing fine. This video today is a little bit different. It will focus on human tragedy and how the intersection of human tragedy and finance always connects. Not the type of stuff I like to talk about, but we have to cover it because these are the questions that come in from the community and important for everybody to be aware of too. We'll also talk about all the impact on all the markets of all the crazy things that are happening and try to figure out if it's the end or not. And if mania is ahead too. So yeah, thank you, TND. I'm standing, which is a big step forward. But let's get into the story. This is called Calm Before the Mania. And thank you to the great mods in the chat as well for being here. And not financial advice as always. All the questions come from Patreon, and let's jump into the very first one. And I'll do some questions at the end as usual, but thank you all for coming. So this is from J-Man. I'm wondering if there's a way we'll know when the TABI, with the TABI and your other indicators, whether there could be a super cycle and we should not sell, or will the top indicators just say the top is in and will just continue on for years anyway? So this is a very, very important question. I missed the top last time around by $10,000, and I whipped myself every day since 2022 because of that. I don't like to make the same mistake twice, and therefore we did things like this. This is the TABI update right now, live as we speak. And you can see here, we're still orange. In fact, the little tail on the snake is pointing down. We are nowhere near dark orange or red. We're still middle of the road. And as I've covered, we are nowhere near overheated. Other references to this too is basically Bitcoin hit the short-term holder cost basis. We haven't gotten anywhere near up top the vaulted price. Okay, so we still have a long way to go. We also see the realized cap continues to increase. That's the orange line. That's a very bullish sign. And the Puell multiple is very calm too. Shout out to Dave Puell, who works with Kathy Wood right now. And finally, the MVRV is also calm. No top signals firing. But there are some fundamental changes happening in the Bitcoin space. And that has to do with the ETFs and the Treasuries and the impact that they have. Another piece of good news I shared yesterday is gold broke a new all-time high. And typically when that happens, Bitcoin lags by about 30 days before it makes a new all-time high as well. And that would take us to the end of Rectember. And I also have a theory that maybe Rectember happened in August because we fell exactly 6%, and that's how much Bitcoin falls in Rectember on average, if history repeats. So everything is, the two things happening in this cycle is kind of weird. One, things are moving forward a little bit. I'll move this a little higher. So things are happening sooner, like we hit an all-time high before the halving that never happened before. And second of all, the market is a lot calmer and the cycles are a lot longer, which I covered as well, I think, on Friday. So in answer to your question, yes, the good news is the top and bottom indicator, the signal is now stronger with the advent of treasuries and ETFs because it relies on less movements. They're much more precise, much more focused. So yes, we can rely on this indicator even more. Will we go up forever into a super cycle? I don't think so. Not until the supply runs out. I checked the OTC desks yesterday. They have plenty in them. So no, the rumors going around the internet that the OTC desks are empty is BS. And top and bottom indicator has been calm. And so have all the other indicators. And the cycle is longer and earlier and different. And I know as well, they are the most dangerous worlds in finance. It's different this time. But literally everything is different this time. And it has been for quite a long time. So I will stick with that thesis, but we will know for sure in 70 days. If we skyrocket up real fast, if TABI goes dark orange and red, we'll be there. I'll be here every day to report in on it. If things are getting overheated, you'll be the first to know if you're subscribed to this channel. That I promise you. I've got no ego in this. I'm just here to help people. So that's it. And I know they are dangerous words to use, but in 70 days, we'll find out if it truly is a longer cycle or not. That's it. Who can wait 2.5 months? I think we all can. We've waited long enough. And patience is very important in the markets. Now, related to that question is from Cheerful Samurai. Hello, James and IA team. If large corporations keep accumulating Bitcoin, Given their deep pockets and fixed supply, retail investors may eventually be priced out and pushed towards ETFs like IBIT. But if institutions end up holding most of the available Bitcoin, won't that reduce liquidity, cause price stabilization, and limit volatility and upside potential? How do you see this dynamic playing out, considering the rate at which they're grabbing Bitcoin? I like the way you think, and it's very important to be aware of the changes. Let's talk about what is actually happening and the impact so far of the ETFs since January 2024. They now, between large corporations, funds, governments, BlackRock, etc., they now hold 17% of Bitcoin. Remember, 5 years ago, they had pretty much nothing with the exception of some government bags. And they are also driving 60% of trading volume in 2025. So a lot of people, a lot of bags that are held by Bitcoin, they're kind of in cold storage, don't really do anything. But with the advent of the ETFs, there's a lot more buying and selling. And those ETFs, even though they represent only 6 or 7% of the total amount of Bitcoin, they represent 60% of the volume, which is huge. Also, spot ETFs like BlackRock have surged past 51 billion in inflows, and institutions bring deeper liquidity, lower volatility, and it's down to record lows of 32.9% in 2025, which is crazy. A quick view of the ETFs, and you see the big black shadow. Yeah, that's BlackRock, absolutely devouring everything. This chart, yes, it had a little dip about 8 days ago, but still up and to the right, new all-time high of actual Bitcoin under accumulation. You can see as well, Fidelity has eclipsed Grayscale. They are in green. Grayscale keeps shrinking away because their fees are high. Now, the treasuries, this is just MicroStrategy. The treasuries, like I think BlackRock owns 750,000 Bitcoin. MicroStrategy owns 632,457 Bitcoin. And of course, Michael Saylor probably bought this week as well. We'll have another report in somewhere between 1,000 and 2,000 Bitcoin, I imagine. And that is having a huge impact. Such a big impact as well. We hit a record all-time high for bag holders with more than 100 Bitcoin. As you know, I analyze the cohorts every quarter, and I need to do it pretty soon again, but just checked on some of my numbers. Wallets holding more than 100 plus Bitcoin average 653.42 Bitcoin each. Together, they control 12.5 million Bitcoin. Remember, the Satoshi wallet, the lost Bitcoin are also part and parcel of this, or not, depending on what you believe. But the point is, the rise of ETFs and treasury strategies has played a massive role in this accumulation, and achieving holy coiner status will become rarer and rarer. And as you say here, what happens is it's going to push retail to these ETFs. Yes, because there's very few retail customers that can buy one whole Bitcoin, even with the price now of $109,100. Very few people have that rattling around in their pocket. Very few people. So the TLDR of all of this, in answer to your question, yes, the pivot will continue to ETFs. I do believe it's convenient, it's easier, it's tied into their accounts. And yes, TradFi has huge pockets, deep pockets. So do governments and nation states. Game theory is early. And some will stick with direct Bitcoin to preserve decentralization, cold storage, etc. Cool picture from Chewy today with some Bitcoin stored in a freezer. But individuals still hold most coins, 66%, and institutional dominance is increasing. And yes, volatility will decrease, and I do believe as well, diminishing returns will decrease. It's been a great cycle so far. From the bottom, okay, 15.5, we've done up, nearly 8x. So it's pretty incredible how far we've come this cycle. And there could be a lot more to come because I do believe there still is a pop brewing. Unless, of course, it's just flat and kept stagnant by some forms of manipulation. We're not sure what's going to happen. But either way, stick around for Q4 because that's going to be bonkers. Next question from HDoc. A couple of docs, a lot of docs in the community. It's mad. HDoc 18. James, I was fortunate to find your YouTube channel during the pandemic. And by the way, it's the pandemic that started the whole thing. When you're bored at home, looking for things to do. Anyway, long story. But it's been life-altering for me and my family. Good. There was a lot of concern regarding MicroStrategy paying the dividends on the preferreds, and they will get the funds to do so. Some are even saying the P word for Ponzi. How do you see this playing out? So, I've been in MicroStrategy for 5 years, and I heard about the Ponzi thing. But actually, no, everybody ignored it 5 years ago, 4 years ago. It only started getting attention 2 years ago, and now everybody's up in arms. And I tend to also be in the most hated assets. MicroStrategy is one of those too. So yeah, people throw mud. But let's talk about why. First of all, it's not a Ponzi. I just saw my Bitcoin chart move. Yeah, a little bit. Anyway, first of all, they are absolutely transparent in everything they do, every purchase they make, every capital raise. It's all reported in real time, openly, verifiable, audited, etc. That's not how a Ponzi works, first of all. Second, investors know what they're buying. They're buying exposure to a leveraged Bitcoin strategy. Again, everything's audible. They also run a software business, and there is no dependence on new investors for payouts whatsoever. And preferred dividends are non-cumulative and also optional whether they pay them or not. So as far as the definition of Ponzi goes, this is not a Ponzi by any stretch of the imagination. Also, what MicroStrategy is, it's a bold, high-stakes bet on Bitcoin versus fiat, period. Don't overthink it. From the very beginning, they are swapping NAV premium, basically a premium on their stock, to issue to buy Bitcoin. And then they get into more sophisticated tools like preferred issuance and convertible debt and stuff like that. But they are swapping fiat for Bitcoin. Over time, they will be successful because fiat is going to zero and Bitcoin is scarce. That's the calculus. Don't overthink it. Also, the magic of MicroStrategy is premium, or not premium, share accretion, which means you get more sats per share every time they buy. Okay. And that's the other miracle of it. Bitcoin goes up, and every share you hold gets more Satoshis. You win to the power of 2. Therefore, it's a leverage bet on Bitcoin. People still don't understand that. I must be the worst explainer in the world because 5 years later, they don't get it. Anyway, the other thing is people labeling MicroStrategy a Ponzi ignores the transparency, etc., asset-backed structure, and there is nobody more open and direct than Michael Saylor. And for the haters that say MicroStrategy appears to be a Ponzi, that means you have no clue about basic finance out there at all. So ignore them, okay? Everything's open, everything's transparent, and the Michael Saylor, CFO, and team understand financial risk management incredibly well. So they're not going to put themselves in jeopardy. In fact, Bitcoin could fall to 20 grand. They still wouldn't be in hot water. So haters going to hate. I think that's the expression. Now we're going to get into some of the tragic stuff that happens in life and how it intersects with finance as well. This is from Avalanche 3. Hi, James and team. Thank you for all you do. I'm unfortunately going through a divorce currently and are yet to split assets. I've grown Bitcoin, Solana, Tesla, and MicroStrategy, and we've sold our home. I'm asking for guidance on your opinion in regards to what I'd best retain to let her have more of, i.e. Tesla and SOL have so much more potential in the short term, whereas MicroStrategy and Bitcoin are much longer term investments. Are you able to share any food for thought? And I've said to her for years that I wanted a portion of her Bitcoin holdings to be for our kids, but I feel she's too narrow-sighted and just wants to cash. Thank you. It's interesting. It gets into the whole psychology of males versus females. Females tend to often be very risk-averse, and they prefer cash over high-risk assets, high-beta assets, and that's just the way of the world. But yeah, let me try and answer this with a little bit of structure. But first of all, I'm not a financial advisor, lawyer, or tax professional. I don't know your allocations. And I've also been there, done that, and got the t-shirt. And it's a very painful process, so hang tight. But this will be the first of the 2 bookends of the spectrum of human tragedy we'll cover today. And as always, finance, money is always at the center of things. And that's just a sad reality. So first of all, let's look at the 4-horse outlook. As you know, when I stop buying things, it's because I'm not going to get a 3x. 42K was my magic number for Bitcoin. I didn't think it would go above 120K. I was wrong, went to 125K, and here we are. But I do believe things like MicroStrategy and Bitcoin are getting to the top of the range. There will be one more pump. But it all goes back to risk reward. What is relatively undervalued? And I agree with you. Tesla and Solana are definitely undervalued. I'm seeing 1,000 different signs that these two, 2026, 2027 will be extremely good for Tesla. And Solana may have their pump because they are massively undervalued and a lot of price predictions are pretty high. The quick summary, Tesla at 334 right now, down 20% year to date. The market doesn't understand what it's doing. They are pivoting the entire $100 billion plus revenue shop into an AI robotics giant. Anybody with half a brain can see that they're going to win this space. But a lot of people don't even have half a brain. So that's our advantage, by the way. That's one of our edges, which we'll get to later, is being cleverer than the herd and never following the herd. Ladies and gentlemen, never follow the sheep. Undervaluation comes from massive mispricing of things like Robotaxi and Optimus. And you've seen how I've been stacking so far this year. Absolutely insane. It's pretty much the only thing I've been buying, with the odd perp and trade out there on the side. But everything is huge and the market doesn't understand it, which is a dream for us. And the lower it stays, the longer it stays low, the better it is for us, because we continue hopefully to stack till the end of the year. That would be a dream. I don't know how long it's going to last. Fingers crossed. Next, Solana, $203. It's off the 2025 highs, but it is best, fastest, cheapest, most adopted. And we have tons of tailwinds coming. Fed cuts, Web3 tokenization, 5 to 8% staking yields. And the average forecast from all the experts out there are $483, which is nearly a 2.5x from where we are, 1.5x from where we are now. 2.5x, yeah. So it's great. And some people are talking about $1,000 bull case. In fact, Mert, friend of the channel, keeps writing $1,000. We'll see where it goes. But either way, it's drastically undervalued. We'll talk a bit about that in a second too. But first, we have to cover the second tragedy. Is from Mike 7 up there in Canada. Another sad story, by the way. And as I mentioned, there's the two bookends of life, tragedy and how finance intersects both. This is from Mike 7. I have a father placed in a residence due to advanced Alzheimer's. My siblings and I are charged with his care and trying to figure out the best path forward. He has a lump sum of roughly 100,000 Canadian sitting in a bank account, from which 3,000 Canadian is taken monthly for his care. Given my brother and I are members of the IA family, we'd like to invest it. And how do we decide how to place it? Tesla is a given, no doubt, but what percentage? Thanks for your NFA. This is a very hard one to answer, but as usual, I do everything with data. So please, everybody, do not find this shocking. And I consulted with our resident, Dr. Sanjay, as well. And I feel very callous to answer a question like this, but please don't take it the wrong way. But as always, again, I'll reiterate, we do everything with data, and this data may shock you. So, per Dr. Sanjay, who did the research for this advanced dementia and looked at a lot of science papers, advanced stage, what they call Fast 7. Once someone reaches the stage of dementia, typical survival is 1.3 years from now. And over 50% don't make 18 months. So that's the dark news. Also, hospice eligible groups, Fast 7C plus, if there are any complications, it could be as low as 4 months. And I know you've been living with this, so you're probably prepared for it. But if these numbers shock you, I am sorry. A lot of these studies come from UCSF as well, and a bunch of other papers. Advanced dementia, 6 months, about 73% make 6 months, 1 year, 59%, and 18 months, less than 45%, 2 years, less than a third. And that's the math. So based on that data, I've taken a very conservative, not financial advice approach to what you should do. We could talk about other assets, but the safest risk reward, things that have minimal downside and a lot of upside, is Tesla. So you nailed that one. And based on the research, I think you should keep the 18-month window of cash needs to be covered. So keep half in cash. Okay. The data says you need 18 months. You have enough for 3 years. But I think what you could do is be super conservative, keep half in cash, and invest the other half in exactly 111 Tesla shares. That is the 50,000 Canadian, converted to US dollars divided by the current price. And 18 months from now, it's likely the Tesla shares will double, hopefully, maybe more, increasing the Tesla bag value to over 100,000 Canadian dollars. And if you still need 3,000 a month, I hope your father makes it longer, you can sell 3.25 shares every month to cover that 3,000. So that's the game plan in a non-financial advice way of what I would do. And yeah, I hope you and your family and your brother do well. And thanks for being part of the community. And I'm sorry about these tragic stories. Next from T-Bot. This is this changing gears back to Tesla FSD. Has bounced around from 5K to 15K and is currently at 8,000. In fact, they just launched FSD in Australia and it's 10,000 Australian, which I think is about 6,500 US dollars. But Tesla also offer FSD at a monthly subscription, which was originally at $199 and now it's $99. At 8K versus the 99, it'll be 6.7 years before buying FSD upfront will be cheaper than $99 a month. And if you financed at 8K at 3.99% promotional rate, it'll be 7.6 years. I like the way you think. The current average car ownership is 8.4 years, and you can transfer FSD from one car to another right now. But the language suggested it might be for a limited time. Yes. And all of this assumes the upfront and monthly subscription models stay the same, which, knowing Elon, it won't. If you bought a new Tesla today, would you go for the upfront cost for FSD or monthly subscription? Well, a long time ago, so this is back in 2019, I bought my Model X and I bought FSD with it upfront, despite the fact that FSD wasn't cooked. I said, why not? But let's look at some history of pricing. You're right, 2019, 5K. 2022, 12K. 2023, 15K, varied, then went down to 12K, then went down to $8,000 because of everything that's happening in the market. Now let's look at the evolution of what's happened. I've had all the versions, been using them for years. Even the old ones are still lifesavers, okay? They may not be able to navigate very tricky circumstances, but they are still incredible. And remember, my Model X is still hardware 3. My Cybertruck is hardware 4. So I experience both sides. But the point I'm trying to make here is version 14 is coming, and that's going to be 2 to 3 times better than a human, okay? 10x higher parameter count, etc., reduced nagging, and it feels alive. It feels sentient, which is bonkers. For them to say that, it means it's very real. I think version 13 is already sentient. So I can't even imagine how good version 14 will be, and that's coming in September. And then after that, it'll be level 4 plus. You'll sleep in the back of your car. You'll go from San Francisco to LA for a meeting, wake up, rock into the meeting, grab a coffee, and then sleep in the car going home. That's the future that's coming. And it's here, ladies and gentlemen. But let's talk about the future price prediction, where I think this will go. I've seen it all. And again, a lot of people didn't buy because they don't like the upfront stuff. And I know a lot of people that pay the $99 a month just to keep their kids safe in the car. And I know people that pay $99 a month because they drive an Uber and it makes their day much less stressful. So how long will that last? I don't see it lasting. I think it'll go back to $200 a month, maybe more. And I predict FSD to buy it with the autonomy and robotaxi and doing your own thing could be as much as $12,000 to $20,000. I could be completely wrong. I might stay at $8,000 forever, but the value of this thing is incredible, and it's almost soon. I think it'll be somehow neglectful of other people not having FSD because it does save lives. But there's another angle to this too, because what I'm seeing now is Tesla are bundling everything to subscriptions. So they're bundling things like tire maintenance, internet access, windscreen protection, supercharging, FSD. And I assume they'll bundle insurance and soon they'll bundle lease. So you'll just have one monthly fee and you'll never have to worry about anything. You'll have a car that drives itself. You'll have a car that operates as a robotaxi, etc. And if a rock goes through your windscreen, by the way, rocks have hit my windscreens and they've never chipped them. And I used to have X6M BMW. And I went through 2 windscreens in 12 months. Okay. I have never had a chip on over 100,000 miles of driving Teslas. I think the glass may be stronger, or I'm just lucky. I don't know. But that's what I see happening. Back to your question, would you spend the 8,000? Yes. Will it always be transferable? We don't know, but I think so. I think they'll do that. So I hope that answers your question. Next question is almost a perfect question, which is what I've been talking about since 2022. And I always stress that we've got 2 years left. This is why. And I'm breaking it out in great detail. This is from To Be or Not to Be. Hi, James. With tools like Grok advancing rapidly and soon being able to support finance and trading decisions, how can investors still gain an edge once everyone has access to the same AI insights? Will it come down to asking the right questions, developing unique frameworks, or something else entirely? Appreciate your thoughts as always. Always need your perspective. I love that. By the way, the most important thing in life today is to be able to ask the right question. Knowledge doesn't matter anymore, but know what to ask. If you don't know what to ask, you're toast. So if you're raising kids, have them question everything. As a kid, I questioned everything. I drove my dad mad, but question everything. That's the one piece of advice I give to parents raising kids. Let's talk about AI and finance and investing and stock market, etc. This is a very crude little image, but I'm going to try give you an idea as to what could happen. And this is much more around short-term investments, what happens over the next 1 week to 3 months type of time frame. Everything is in time frames, so remember that. But I do believe there will be this convergence of AI-driven prediction and invention is becoming a reality. What I mean by that is as AI becomes trained on market data and to be able to look at X news sentiment, they'll be able to predict the impact of that on a stock price, whether it's likely to go up or down in value, or predict the S&P 500 of the next 12 weeks, or a Bitcoin price, or a Tesla price, or whatever. And the second step is the intervention/invention, whatever you want to call it. Hedge funds and institutions already automate rapid trades on this prediction, and others will follow suit. Everybody will have the same capability. And that brings us to this weird convergence. This mass execution of automated trades creates a surge in demand for the stock, causing its price to rise as predicted. This becomes a self-fulfilling prophecy. Okay? You cannot beat the machine because everybody will be doing the same thing. As I mentioned at the beginning, you don't want to be a sheep. Okay? You got to be in early. You got to be ahead of the move. It's absolutely critical. Let's break down the time frames. My timeline for where traditional trading is obsolete. So now until 2027, we'll slowly see more low-hanging fruit disappear as AI accelerates. So what you need to do is get smarter with AI and tools and methods and technical analysis and trading what you like and options. That's going to be critical. I keep on stressing that 2-year window. By 2027 to 2028. And by the way, as I said before, I too will probably be obsolete. There'll be some robot on one of the billion YouTube channels that'll be creating content that'll be AI generated, which would probably be terrible. I hate the AI generated stuff anyway myself. But anyway, by 2027, 2028, trillions in inefficiencies will be moved from AI. Remember, salami slicing. Money is made in markets from these algos, just taking little pieces, lots and lots of trades. So the way you survive 2027 to 2028 is focus on niche, custom strategies and thematic long-term bets. Okay. So the way we win is to be able to see what's coming. And I spend a huge amount of my time predicting the future. Okay. Putting all the data together and cooking up a tapestry or a casserole or something of what the world will look like in 2, 3, 5 years. And then you play to that. So all the investing I've done this year is playing to that. I'm betting on the future. I'm not betting on the price by year end. I'm betting on the next 2 or 3 years. Very important. And that is the niche, custom, thematic, long-term bets. And then beyond 2028, markets will be completely dominated by AI. Human edges will only be in creativity, private data. Like, oh, by the way, our government officials have great access to private data too. That's why they're so successful. they will be the people that win, and treat AI maybe as a co-pilot, not autopilot just yet. Also, remember the unbeatable machines. Humans will not be able to compete with that massive compute power. And things like arbitrage and swing trades will vanish by 2027. By the way, arbitrage and swing trades is a huge part of my life. That's going to be gone. Okay. But I've gotten to where I want to be. That's why I do this stuff now, but that's sad. And also trading becomes bot versus bot, and individual investors will be excluded from that party. And for most short-term trading, it's impossible to beat the machines. Okay. Again, everything I've said so far is short-term, short-term, short-term. You got to think medium to long-term if you want to win. Now, how do you win? In answer to your question, and sorry for all the tables, it's a bloody complex question, but it's something that I only have thought about since 2022. So I have all the so-called answers. Where we still have an advantage as mere mortals is we need alpha exclusive info, not in public data sets. So if the knowledge is out there on Twitter or somewhere else in magazines, papers, you're not going to make it. But it's also important to do things at scale. I can analyze 30,000 stocks at once, use AI for grunt work, financial modeling, etc. And also think about the future. Bet on what's coming next, the emerging sectors. Me, that's AI, humanoids, autonomous technology, all my play. And if you watch the channel and if you're in Patreon, that's all I obsess about and have done for years for a reason. This is why I'm paranoid about losing the edge that I have. All my ARB and swing trading, boom, gone in 2027. Okay. How am I going to survive? This is how I survive. I play longer games, beat the machine by predicting the future better than the machine and positioning myself earlier than the machine. Also use AI assisted screening and my high conviction trades, and also build a thesis around where the money is going to be, and perhaps also venture capital, private equity deals, niche deals, etc. Now, there is something that's not on the table. I forgot to add it or didn't have space or whatever. But there is the intersection of AI and crypto. So AI is going to take away our trading opportunities, but crypto could increase them. Give you an example. We might be able to perp trade on the future price of a tokenized asset, which we can't actually buy because it's pre-IPO and it's all within the hedge funds and the private equity funds and the VCs. But maybe we can use crypto to perp trade the future price of something like Anduril 2 years from now or whatever, and get in early, get in hard, and wait. That way, we can still participate in the market without actually having the private access that we typically need. That's one thing that I'm very focused on too. We're not quite there yet, but we're getting close. But final point, and by the way, this is to be a great question. And by the way, everybody is asking the right questions. I started a new series on Thursday called AI Impact. If you're in Patreon, you know I've been talking about AI Impact for years as well. Now it's become a dedicated video, and the feedback has been phenomenal. Everybody is now acutely aware that AI is impacting their lives. So congratulations, everybody. Finally, this guy, love him or hate him, he knows what's coming. And he said, all will be wiped away by the supersonic tsunami that is AI, everybody. All will be wiped away, including our trading advantages over the short term. We'll still have medium-term plays, long-term plays, but I doubt I'll be able to find option pricing inefficiencies like I do right now and things like that. So get ready. Next 2 years are critical. Enjoy them and milk it for everything. I feel like milk the markets next 2 years. It's going to be a lot harder after that. I promise you that. What a dark Sunday. And happy, but you have to hear all this. And I know you guys are all strong, so you can take it. Lumux. Hi, James. Long-term follower since 2020. You mentioned in Thursday's video that AI has soaked up all the info on the internet, but can these AI models be trained to do the same thing on the dark web? With so much of our leaked private information, can you see if this poses a potential risk to everyday people? Thanks again for all that you do. Yet another dark and tragic question. But again, you're also asking all the right things. Let's look at Let's look at where AI learns. First of all, what AI trains on. Web scrapes, 57%. That is looking at all the content on the web. About 15% comes from books and publications. 4% is Wikipedia and encyclopedias. And 9% is web forums and social media, etc. 7% is code repositories. And then 8% is transcripts and more growing area of synthetic data. That's what AI trains on. And when you look at the key component of that, where AI scrapes info, this is kind of crazy. 40.1% of all the stuff that LLMs use to train on is from Reddit, okay? And this is not my quote. I don't do Reddit. I'm not on Reddit. But Reddit is supposedly known as a very negative place where you hear from the squeaky wheels, the vocal minorities, rather than people as a whole. And also, it allows unfiltered expression, upvotes, downvotes, echo chambers, mob mentality, reward outrage, etc., full of angry people with pitchforks. They say, I don't know, I don't go there. Combative users overshadow the silent majority, meme-driven, snarky, toxic, blah, blah, blah. They're the words I just... when I use AI to summarize what Reddit is, it comes out with that. So probably not a good thing to learn on. And that's why you have the Reddit subreddits that do things like punch, GameStop, meme stocks and everything else. And they all lose. It's like, what was the other one? Some big short that they all YOLO'd into and all got wrecked. I think it was a Tesla short, believe it or not. Speaking of Tesla, Elon Musk says, all human data for AI training is exhausted. This is the part of what you said. All is exhausted. And therefore, the key now is to pull in real world data. If you saw my Thursday video, it's all about photons, learning from videos in the real world and analyzing that data, and also creating synthetic data, building scenarios, because again, all of this stuff is exhausted. There is no LLM that doesn't have access to the world's information. Now, back to your question. Darkness. Hello, darkness, my old friend. Does AI have access to private info? The answer is yes, it does. There is so much out there, even if it's on the dark web, from breaches like Equifax, or I don't know who the hell Ashley Madison is, but apparently she must have a lot of information, has all been seen by AI. And training AI on it is a real risk. And it probably happens. And when models ingest things like PI, which is personal identifiable information, without any proper filtering, this can inadvertently expose it to regurgitating bad data in responses. That could be your social security number, etc. And privacy breaches could enable re-identification attacks, piecing together a whole bunch of data to target individuals for scams or harassment, or Bitcoin holders and stuff like that. And so much more. So these AI systems, yes, they do hoard a lot of information. They have everything. And Lumux, thank you for the question. It is a very, very valid concern. But assume everybody knows everything about you, okay? Therefore, don't click on any links. Don't answer your phone. Don't respond to anybody, even if it's a fake voice over the phone. And don't give anything to anybody. Make your OPSEC in such a way that even if somebody held a gun to your head and you had to transfer money, make it possible that's not even possible. Lock everything down, okay? That way you can't be scammed. But you're right to be paranoid because it's all out there. Everything's out there. Next question is from Shoutout49. Hi, James. Can't thank you enough for how you helped me improve my future. Awesome. I missed the early entry into MicroStrategy. I made some money with it, but not overwhelming. I was early into SOL, but would it make sense to rotate out of most of my SOL position and into Tesla later this year with the help of the LILO and profit-taking models? I have a good bag of Tesla, but never big enough in my view. Best wishes to all. So, as you know, as far as I'm concerned, Tesla, since the last 2 years, has been the new MicroStrategy bet. And let's look at some data. First of all, this is Solana. It does like 6,000% more than Ethereum does in many, many cases, many ratios. And it's trading at 20% of the market cap of ETH. By the way, you've got XRP there at 31.2%, which is completely nonsensical. I mean, this thing has 20,000 daily active users. Even Cardano's on there. Some stuff is just nonsensical. But there's one winner out there in crypto, and I pegged it first in early 2021. Not that it was a winner then, but they had the right stuff to be the winner. And that goes back to stuff that AI can't predict. You still need to do a lot of hard work, heavy lifting to identify that. So first of all, it's deeply undervalued as per the question from Mike before. My profit-taking model setup for Solana, I would very much like to hold on to probably 60% or more of it. Share little, depending on exactly how far we go, how high we go. A lot of crazy targets up to 480. You can see my LILO goes up to 420 here. I think it's not by chance 420. It can't be exactly 420. Let me try zoom into that number. 418 is the number on here. Wouldn't be 420. It's a funny number. Anyhow, the point is I do plan on holding it long term. Even if there's a bear market, I can hedge to protect the downside if there is some downside there. And that would be what I would probably do. But there's one other thing that I want you to think about as well carefully. And this is the pair chart. As you know, I say everything is a pair. If you look at this is the SOL Tesla pair chart. And you can see here, we were up to 1.3 at one stage. That means for every SOL token, you got 1.3 shares of Tesla. So watch this one very carefully. Parity, I believe, in this banana zone, if we do enter it, if we get an alt season, may not be far off. You might be able to get one Tesla share for every Solana token. That would be bonkers. And by the way, we were there back in, what was that? April, May 2024, I think. Yeah, that's when it was parity. Since then, it's been down to 0.75, 3/4 of a Tesla share for every token, and then down to 0.61, and a lot of time around the 0.45 area. But now it's coming back, and it's coming back fast. I do see us going back to level 4, and that would take us to 3/4 of a share for every token, maybe more. That's if Tesla stays down. So keep an eye on that chart too, and always keep some, Solana until the day comes where it becomes 100% of ETH market cap. Then you can think about taking it all off the table. Thanks for the question. Next question from Ron R. Can we get your take on Autozone stock? It's up only forever. Is this sustainable? Also, should we put some money in the stock when the bear market starts? Ticker is AZO. Wow. I never analyzed Autozone, but it's funny. I went in, it's like, Autozone, do they sell secondhand cars? And then I went in and Googled it. This is Autozone. It's basically a place that sells spark plugs and belts and things to repair your old ICE vehicle, pretty much. You're not going to get Tesla parts in there, except for maybe some wiper washer fluid, which is, by the way, the only thing I've ever had to service my car on. That's 6.5 years old. Crazy. Let's look at the chart. This is Autozone, and wow, what a chart. This goes back to 2017. It is up only. Unbelievable. Stock price over $4,000, up from 200. And you can see the blue line is pretty much, trend is just up, stays above the 200-day moving average. I'm like, what the hell is this thing? This is pretty unbelievable. This reminds me a little bit of getting into something like a Costco or a Home Depot early. These little retail gems can be quite fascinating. But because I do disruption and technology, I don't look at this type of stuff. However, it is interesting. But let's look under the hood. Excuse the pun. I'm feeling, my energy is so good because I can stand straight again. Such a good feeling. Health is wealth, everybody. But these are the Autozone financials. Yes, revenue is growing. It did go through a bit of a slump there in 2015 to 2017. Then it started picking up in 2021, all the way to 2023, 2024. So revenue is growing, but not a huge clip. But the debt is very scary. They have absolutely piddle all cash, and their debt is growing. That is over $12 billion of debt, and their revenue is only $18 billion. That's what you call an ugly coverage ratio. Let's look at some more financial warning signs. They are issuing debt like mad. Over the past 3 years, issued nearly $3 billion in debt. The insiders are selling. PE ratio is a 10-year high. Price, 10-year high. Price to sales ratio, 10-year high. This one is juicy. Okay, very juicy. for a retail business. Now, what is strong about it? I'll give it a fair shake. It is the market leader in aftermarket auto parts and has a very strong DIY customer base. Steady revenue growth, net sales up 5.4%, not too much. And they have a large existing, large market segment that they service. That is, the majority of the cars on the road are still gas-powered internal combustion engine vehicles. So that's what they live on. The danger that I see, if I'm looking around the corner, thinking 3 years ahead, I have a couple of problems with this one. One, massive inventory overhang, 7 billion stockpile on top of 12 billion in debt, growing 11% year-over-year increase, and all ICE parts at risk of obsolescence with the EV shift. Okay, if you drive around California, literally now, 1/3 of every car you see on the road is a Tesla, whether you're in Sacramento or San Francisco or Palo Alto. It's shocking how many Teslas are on the road. And I know California is not representative of the rest of the country. The point is, it's a canary in the mine. It's like Norway. Norway is like 90% Teslas. So it's just what's coming. And Teslas don't require any maintenance, and they'll become the majority. And ICE vehicles will become collector's pieces. And robotaxis are coming too, which means people will need less cars. You won't need to have a family of 3 cars anymore. You'll have a family of maybe 2 cars, and the heavy use of robotaxi. Cars are also getting more reliable. The Toyotas kind of run forever. They need less parts. And I'm very worried about their extreme leverage, huge amount of debt, cash reserves. They got nothing versus the debt load. Earnings are under pressure. Net income down 7% year over year. And there is bankruptcy risk. This, I guarantee you, in the next 3 to 5 years, will be a house of cards that will come crashing down. This chart will not stay up forever. When it comes crashing down, I don't know. Would I short it here? Not yet. I'd have to see more signs that things are about to crash. But I don't know enough about the aftermarket car part business or repairs or the DIY market, etc. But that will not last forever, for sure. I would not be a buyer here. Autozone, get into the zone. Hope you like the answer. And we're helping animals this week. This is Leo, the cat meow. The poor thing has feline leukemia virus, which is contagious to other cats and weakens her immune system. He gets breakfast in bed in the stroller on the way to his happy place and then rolls in the dirt. Love it. Thank you so much to the team that helps with all this. Tomorrow is DCA in the usual time in the morning. And I hope you all learned something today. The goal of every video is to share a learning every 60 seconds. I call that KPM, knowledge per minute. That was the calm before the mania and how tragedy could hit in many different areas. Let's get into some live questions. And a big thank you once again to Team Tesla, Sean Donnelly, K8, all the mods in the chat, and everybody for coming. All right. Let me go find these things. Find the questions. Doc Intern, my regular doctor, my favorite doctor. Can you please do a video on how effectively to manage margin, how to understand margin maintenance requirements and avoiding margin calls, etc., especially given the volatility of the assets we're investing in? Yeah, so I could do a video on it. I can also explain it real easy. I literally keep my margin way under 20%. So imagine I've got round number, say $1 million in margin in an account, which is a function of Tesla stock that I bought many, many years ago. I will never use more than 20% of that margin. I'll keep 80% for a rainy day because I don't know if a nuclear warhead is going to pop off at some time, but I want to be prepared for a black swan. If a black swan hits, and I know one hits every 5 years or so, I'm going to be ready to jump in. And that's when I deploy all my margin. But I'm very happy using options and leverage and my positions and trading and perping with that going into that margin bag. I also use it to sell primarily puts, sell a lot of puts all the time. And that's how I use margin, but never, ever get to breaking point. The worst thing that can happen is imagine a little black swan hits. You dip into your margin, it goes to 100%, you get liquidated. And they sell your stuff at the bottom and then you get wrecked. Never let that happen. I've never had a margin call, and I never will. So manage financial risk management. That's all you need to know about margin. Be very careful. IZ55, Fidelity custody not available in my state. Are there any other options? Thoughts on miners clean spark in my bag? Thanks for your com. Oh, I didn't know Fidelity custody was not available in some states. So I'll dig into that and find out what other options there are. Typically, the typical custodians need kind of high net worth individuals. But if that is the case and you are concerned about self storage, think about an ETF, or you can get creative by, safe deposit boxes and other things like that. But I'll look into that as well. And thoughts on miners, clean spark in my bag. Miners I'm getting so impatient with. We had a great time with miners in 2023, 2024. 2025 has just been dead money. Dead money. Iris Energy is doing good. Clean Spark got rid of their CEO. Marathon is trading out their Bitcoin bag. It's just dead. And I just made a post on Patreon that Iran can mine Bitcoin for like $13,000 of energy. Because I always said it's a cutthroat business, never have more than 5% allocated to Bitcoin miners. That was prescient. And that's, again, goes back to financial risk management, very important. I'm just waiting for that pop. Give me a little pop in these things. Give me a little supply crunch and exit the miners in one day. Get rid of them all because it's just dead money. A lot of people are clinging to dreams. I don't do that. And my miner positions, by the way, they're very small because everything else has grown and they haven't really grown. But I've got 2 perp positions in very high risk crypto that is bigger than my miner position. That's just for perspective. Don't have a lot allocated. If you have a lot allocated, move it out. Get it under that 5% or even under 3%. I think I'm under 2% right now. And thank you for your super sticker. Psych Experience, Nick M, Signal 103, Forest, GQ Trader, French Dreamer, and all the cool people out there. Anglo Blackson as well. Did I miss anybody? Nick M, thank you. Thank you, K8, Sean D, T&D. Got it done. 52 minutes. But you won't find this content anywhere. Hope you like it. Hope you learned something new. And remember, the next 2 years are critical. Said that before. Say it again. Good night.